Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of NEO, ticker symbol NIO. And so I am recording this during market hours on the 11th of September. And I just wanted to follow up on the NEO videos. I was looking at the chart thinking, I don't really like how it gapped down on September 10th. So what we can see here is on September 9th, the close was at $6.28. And then on the 10th, came down nearly 9%, closed at 572. And so I was thinking, man, I don't really like this. I don't really like it. But then I started to see that so far on the 11th, we're up about 6.29% so far. I am recording this about 50 minutes after the market has opened. And I started to think, well, actually, maybe I should look at some of the data and see if I think that this gap down is supported, that we will continue down to the 50-day simple moving average, which is currently, it looks like right around $5 at 4.98, or if I think that this is a bull flag formation and that we will continue higher up to around $8. And I must say that, I'm going to give options for this going up or going down. Nobody knows the future, and so you got to prepare for the upside as well as the downside. And if you are coming here for me to tell you an answer of exactly what this is going to be doing, I'm sorry, but you're an idiot. Nobody knows the market, and we have to use the data to inform ourselves on, the scenarios, whether that's to the upside or the downside. And so, I do get a lot of very nice comments. So thank you to those of you who do give the nice comments. But I do get some where people call me a clown and stuff like that for saying it could go up, it could go down. It's gibberish. It's not gibberish. It's English, and it's probabilities and whatnot. And so, anyways, these are all of the levels that I've gone over in previous videos. This Fibonacci retracement is still intact. It is based on the high over here from August 26th and going back to the low from August 14th. That's locked in place. I'm not adjusting it. And we can see from that gap down, we did get a retracement to the 50% level at 560. And actually, if we do look at the low from September 10th, the low was exactly 560. So maybe if there was a limit order placed there, it wouldn't have gotten filled. I think that is, pretty nice. Do I think it could go down to the 618? In all honesty, and that's at 531. In all honesty, no, I don't think that's going to happen. And no, I don't think that it's coming down to $5 at that 50-day simple moving average. And the reason for that actually has nothing to do with my drawings. We can look at the chart right here, and the thing that stands out to me is this massive volume candle. And you might think, well, there's a lot of volume there on a red day. That's not very good. But, it really comes down to emotion and thinking about myself, there's a gap down. Maybe I should be happy with this move that we've seen here. And it's speculative. It's a Chinese stock, and all of the geopolitical stuff that we have to deal with around that. But the reality is, with this large amount of volume, what do we see in the candle spread? We saw a very, very small spread in that candle, and it's backed by volume. So there's a divergence there. And so when there's a divergence in the spread in the candle and the volume, that means the move is not supported by that effort. And so we don't see a massive sell-off to the downside that would be moving in concert with the volume. What we actually saw was some absorption. We saw buyers stepping in, holding the stock up. Sure, there was a gap down, but it didn't continue down with that volume. That gap down was met by buyers holding it up, absorbing that. And now we're seeing green reversal. Of course, the day's not over, so who knows how it's going to end. But this makes me think that this was a dip buying opportunity. And I mean, and look at this. Look at, I don't even know if maybe I got it drawn up there. No, I don't have it drawn up here. So let's just draw it like this. What do we see right there? We see a breakout in that volume. Buyers stepping in on that gap down. And so, yeah, I mean, that's really the extent of that trend line that I want to draw. And so I might, let's see, take a step back just so we're not so zoomed in here. I do have a lot of stuff on the chart. Maybe I do want to clean some of it up, but, I mean, we're just dealing with it right here. So let's just focus on that, ignore what's over here. And so, this doodle that I have coming back down to around $5, I don't think it's happening. I, of course, could be wrong, but I don't think it's happening. And so because I don't think it's happening, oops, I deleted the wrong thing. I'm going to delete that doodle there. Okay, and, this one to the upside here, that didn't happen. Just to clean up the chart, I'm going to delete that. And one thing that I do have, I believe, up here on the chart, but it's not on the picture, is a Fibonacci extension. So going from the low from August 14th, which was at 437, up to the high on August 26th, which was at 683, and then now down to the low of 560. We can get an idea of where this could be going to the upside. And so I'm just going to adjust the y-axis here a little bit so we can see 100% extension. I'm going to actually have to adjust that a little bit, but right now it's at $7.96, or let's just round that up to $8. So this is making me think the price target's $8. And so that is based on the low over here, like I said, from August 14th. That is at 437. So I'm going to make sure that's matched up there. That looks good. And then the second point here, 683. And we'll have to check to make sure that's correct. I believe it is. And then here I can adjust this to 560, bring it up to that 50% retracement there. And so I'm just going to remember 683. I can check that here. The high, 683. So that's perfect. I can lock that into place. And that puts the 100% extension at 806. And if you're not familiar with those Fibonacci extensions, how you get them, 100% at least, that could be drawn. Let's see. I'm just going to do it very casual here. Let's see, actually that's zigzagging it and stuff. I don't really like that. So I'm just going to do a trend line from the low up to the high. And then if I take that line and then just move it to the low, that brings us up to around $8. So that's how you get that move. Oops, what am I doing here? I meant to delete. I hit the wrong key. Okay, so it seems pretty feasible that NEO is heading towards $8. And in all honesty, I had bought some back at 590, thinking, with this gap down, I want to get out. Almost got out at 590, and then it's like, well, maybe it goes up to 6. Well, actually, let's have fun with it. Let's do 609. Currently, price is above at 609 at 611, and so I actually adjusted that to 690. But as I'm talking about this, in all honesty, I have a small position, so no financial advice, but just recording this now, seeing this get above 609, that's making me think that I actually want to adjust my level. I'll probably do it based on a percentage gain in 10% increments, but I'm actually going to move my sell because, I'm trading. I think this could go up to 10 by the end of the year. Maybe you heard a beep. That's me adjusting myself from 690. Having fun with the numbers. I like 6s and 9s and 42s and O's, 420s. But yeah, I mean, I think this is going up to $8 at least. And so just thinking about that, $8 here, let's actually take a step back even further. I should have the 1618 up there, just like I had over here. But good to note, price didn't get up to that 618. It went past the 100%, but didn't get up to the 1618. And so let's just move this down a little bit. The 1618, 958. So that's making me think that price is probably going to get to between $8 and $10 on the next move up. This being a bull flag. Look at that green candle too, by the way. That just looks so nice. So I had lost some conviction. The market plays games with our emotions. We see this gap down. They're raising, what is it, $1 billion or something for investment. I forget. I'm not really sure. I don't pay too close attention to that stuff. I really just like looking at the chart and the options data. Yeah, playing games with my emotions. I lose conviction for a day. And then, thankfully, no orders were filled. And I recognized, looking at this chart, what we saw yesterday was a dip buying opportunity and that this is going up to 8. But anyways, let's talk about some levels related to options that I think are going to make you guys pretty excited. And so looking at the price being above $6, and maybe with this being Thursday, maybe this is a little bit of a caution, but the max pain for tomorrow, for September 12th, is $6, so that's below us. So if we close above that, that's really good. We want to be seeing closes on Fridays above max pain. However, since price is so close to $6, that could serve as a magnet to pull price lower. But then, if we look at the September 19th options expiration, max pain, that is $4.50. So that's multiple strikes below current price. So even if that acts as a magnet and pulls price down to $5, like I said, I don't think that's going to happen. Still closing above max pain. And so I think that we could be getting into like a gamma ramp territory where this does really start to push up. If it closes tomorrow, Friday the 12th, above 650, that's a strike above max pain. Maybe we see some continuation and, a little bit of a squeeze going on in the following weeks. So very exciting to see that. But I think it's going to be important for us to be closing Friday, notably above 6. And if we do maintain the momentum now at 613, I think that could be happening. And also, looking at the chart here, we do have, a little bit of, however I want to draw this, can be wonky. I'm not the best at knowing how to draw these trend lines, but we haven't really seen any, closes. If we saw a close above Tuesday's high, which was September 9th, that was at 632. So if we see a close today above 632, a close tomorrow, Friday the 12th, above 632, that tells me we're breaking out. Maybe we could get a retest of this line in that, attempt with the following max pain being 450, attempt to magnet the price down. With the failed attempt to do that, I think that will, basically, let's, do I want to just do a doodle? I think I want to just do a doodle. Hopefully it doesn't make it all blocky. Yeah, something like that. I think that we could see. So don't be too surprised if that happens. And that is right there. The cursor's at 599. That kind of makes sense with the max pain on Friday. So maybe I'll just leave that up and we can kind of evaluate it in the next video a week or two from now when I do that. But then looking at the contract data, so this is a call that I had previously talked about. This is the $3.50 call that expires not this Friday, but next Friday on September 19th for the monthly contracts. $3.50 strike, deep in the money. But what we can see is that I had talked about this, let's see, when it was like 200,000 open interest, I believe. You might remember it from some of my earlier videos. I talked about it when it broke down below open interest of 190,000, went to, 189.9 thousand contracts open on August 1st. And then now looking at the open interest, it's actually below 100,000. We did see a pretty massive sell-off. Let's see on, let's see, on the 8th, on September 8th, we had 111,000 contracts open, but then we saw a decrease of about 12,000 contracts going to 99,000. So there's some selling, but as we do approach the expiration date, it's always good to be taking profits. It's always good to not be holding contracts to expiration, unless you want to exercise them, which you could clearly do at the strike of 350. Buying 100 shares at 350, that's a gift when price is trading at 611. But at the same time, you've got to be taking those profits. It's not real money until you've sold. And so I think it makes sense that the open interest is going down, but still around 100,000. So yeah. And then if we do look at the data over here, the net call and put premium, so far today on September the 11th, we can see that the green line, the yellow line is stock price, as we've talked about. That's going up. The green line is net call premium, and that is currently up by $1.3 million. And so that is looking very good. And then considering the max pain for next Friday, and this is also a covered call that I had sold, regrettably so, a little bit, but at the same time, for me, it's managing risk. And I think that's an important part of it. I could be making more money had I not sold this covered call, but it is what it is, and I'm dealing with it fine. I'm fine. And that is the $4.50 strike call that expires next Friday on September 19th. That, like I said, is the max pain for next week. And so if we're closing well above that, if we have contracts with the $3.50 strike that could be getting exercised, I think, it's like powder keg type of thing that we could be getting a squeeze here coming up in the next couple of weeks if some of those contracts start to get exercised. So that's pretty crazy. Yeah, and to be honest, it kind of makes me think maybe I want to buy back this contract because, thinking about it, with price at $6, if I think it's going up to $8 and I were to buy this back, let's see, the high so far today is $1.43. I'd be spending $143 to buy back that contract, but I would not be forced to sell at $4.50. I could then sell at $6, and that's, $150 or $1.50 more, than that price, $150, because, it's 100 shares. And so if I be buying back at 143, and then I could sell at 6 or maybe sell at 8 or sell at 10, then, I think that that's actually, I just think, trying to think about my thought process. Like if I have 140 shares, but I sold 100 in this covered call. If I sold the 40 that I have now, the 40 shares, I could then buy back this contract and then I'd have exposure to 100 shares versus exposure to 40 shares with being forced to sell at $4.50. So, to me, all of this is looking like it's going higher. And so, yeah, it's like you've got to at some point, except when you make mistakes, and selling this covered call, that was a mistake. The goal is to make money, even if it's a little bit of money. The goal is to not lose money, actually, I should say. And so to buy back that covered call, that might actually be the wise decision. So, I'm thinking about that. But anyways, the other contract, this is one that I do hold one call. I did trim some. I think I had 3 in total at an average price of 32 cents for that premium, which is 32 cents times 100 shares is $32. So that's the amount of risk I have with this contract, which is the $10 call that expires in June 18th of next year. So 280 days between now and expiration. And for this contract, while we have seen some selling, for the other contracts that expire a week from now, for the one that expires 280 days from now, so well into the future, we've actually been seeing some buying, 100,000 total premium traded, let's see, a couple days ago. So on the 10th, so actually yesterday, let's actually see. I'm going to scroll down here to try to understand, to interpret this data. I haven't really looked at it too much. But so what we see, so on the 9th, we saw a volume of 800 of these contracts, 803, and we had an open interest of 71,800 894 contracts open, but then that led to an increase of nearly 500 contracts open interest going up from sub 72 to above 72,000, so 72,385. But then we saw further buying following that over 3,000 volume on the 10th. And that led to, well, there was a lot of trading in and out. That 3,124 volume there led to an increase in open interest of 184 contracts. And so we've gone up the past couple days from 81,894 to currently being at 72,569. And so, I think this looks really good. This is longer term, so it's a safer bet. $10. It seems like we're going there. So, I am not trying to suggest what is a good idea or what should be done, but I am going to try to, I don't have too much cash in my account right now, but I'm going to try to maneuver into maybe, buying back this contract. Oh, now it's at 160, so maybe that's a little, I don't know, but like 609 right here, current price. I think that NEO's going higher. I think that it's likely going to at least 8. Oh, crap. What am I doing there? I think it's going to likely 8. By the end of the month, maybe. I would say, if not by the end of September, sometime in October, I think that NEO could be hitting 8. And by the end of the year, I think we've talked about it a little bit in the comments, I think NEO could most definitely be hitting $10 or getting into the $9 to $10 range by the end of the year. That seems pretty feasible to me based on what we're seeing in the chart, that these moves are backed by volume, suggesting that any move to the downside, this gap that we saw yesterday, that is supported by buyers stepping in, holding up the stock price, that we have not yet filled the gap, which would be getting to the closing price from Tuesday, which is 628. We're nearly there. I think that we're going to be filling that gap, and I think that this is going to be getting past the highs from August 26th, which was 683. I think we're going to be getting into the 7s, the 8s, the 9s, and maybe the 10s by the end of the year. So I am pretty excited about this, although I think it's pretty risky given that it is a Chinese company. It's in the EV space, which is a little bit contentious. I feel like Tesla is a clear winner there, but Chinese EV manufacturers are going to be a competitor to Tesla. And NEO, with their battery swap technology and all this stuff, I think that there could be some competition there, and the chart could be taken off. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more periodic coverage of NEO and other stocks that stand out to me. Thanks a lot for watching. Have a great rest of your Thursday and a great close to the week. Hopefully, NEO closes above $6, ideally above $6.50 Friday the 12th, but we'll have to wait and see. Take care, you guys, and have a nice one.